Hey guys, it's David, your favorite trader, developer, and money-making sidekick. And today, we're diving into something massive happening in the US financial system. It's not just some tinfoil hat conspiracy. It's not just theory. This is real legislation, real banking changes, real crypto integration.
Treasury Secretary Scott Bessent says the launch of these dollar-pegged stablecoins could unlock a $2 trillion market.
Imagine this. You wake up, open up your Chase or Bank of America app, and right next to your checking account, there's a Bitcoin tab. Below that, a line that says USDC balance. No, you're not dreaming. We're on the brink of a US banking system being directly plugged into crypto. Stablecoins, Bitcoins, custody services, all backed by your bank and approved by the government. Most people have no idea what's even happening, and that's what this video is about. I'm going to walk you through the Genesis Act, the Clarity Act, the Bitcoin Act, and some behind-the-scenes moves from the OCC and the Federal Reserve that are quietly rewriting the rules of banking.
Legislative win for the crypto industry. The Genius Act passing in the Senate earlier this week, the bill establishing a federal framework for stablecoins, and now going to face a vote in the House.
Stablecoin legislation is expected to clear the Senate this week. Stablecoins underpin most of the $3.3 trillion market for Bitcoin.
This isn't just big, this is historic. And by the end of this video, you're going to understand why. If you're serious about crypto and you care about financial sovereignty, you'll want to be 5 steps ahead of your bank. Smash that like button and let's jump in. Up first, the Genesis Act, or by its full name, Guiding and Establishing National Innovation for U.S. Stablecoins Act. Yeah, that's a mouthful, but this bill is a game changer. It passed the Senate with an overwhelming bipartisan support, 68-30, and now it's on its way to the House. This is the first serious crypto legislation focused entirely on stablecoins. And here's what it does. Only insured banks or OCC-approved non-bank institutions can issue payment stablecoins. That means if you're Circle, Paxos, or some random fintech company, you either get approved or you're going to get kicked out. Every stablecoin must be 100% backed by high-quality liquid assets. No more fractional reserves, no funny math. We're talking treasuries, cash, or cash equivalents. Audits must be done monthly and done by a third party. There's total transparency. If a stablecoin says it's worth $10 billion, well, they better show that $10 billion sitting somewhere in some account. Every program must comply with AML, KYC, and the travel rule. This brings crypto into the same compliance standards as traditional finance. What this does essentially is give stablecoins the same trust and legal structure as the US dollar. So imagine sending rent to your landlord in another state instantly with no wire fee, no waiting 3 days, or remitting money to a family overseas with no Western Union middleman taking their huge cut. And what's even more powerful, stablecoins are about to become the bridge between DeFi and traditional finance.
We've been embracing and building for years, preparing for this moment. The Genius Act has now passed the Senate, as you know, and is expected to pass the House. I think that'll give regulatory clarity to stablecoins. And if stablecoins become a mode of currency that people want to embrace around the world, we will enable that on the Visa system and scale that to those billions of endpoints. That's what you need to do well in payments. That's what Visa does better than anybody in the world.
We're going to start seeing banks offering USD transfers like ACH. Merchants will now start accepting stablecoins like Visa, MasterCard. You're also going to be able to get your monthly paycheck in crypto. That sounds great to me. Visa already said they'll start scaling stablecoin payments to billions of endpoints worldwide once the regulation is clear. JP Morgan, well, they already have JPM coin, which has now been renamed to JPMD. And even Walmart and Amazon are all experimenting with digital currencies. The Genesis Act is the key to making all of this a reality. Let's take a step back real quick. What exactly is a stablecoin and why is it so important to crypto? Stablecoins are digital assets that are pegged to a stable value. Usually that's the US dollar. While Bitcoin and Ethereum can swing maybe 5 to 10% in a single day, stablecoins stay locked in close to that $1 value. There's a few different types of stablecoins. There's a fiat-backed stablecoin like USDC, USDT, BUSD. Those are all backed one-to-one by real dollars or the dollar equivalent. There's crypto collateralized stablecoins like DAI. They use over-collateralized crypto, mostly Ethereum, to maintain its stability. And there's algorithmic stablecoins. Let's just say they've had some famous, serious failures. Terra Luna, sorry. The big takeaway, stablecoins are like the cash of the crypto world. They let you move money instantly, 24/7. They avoid volatility while the market is bouncing. And you can earn staking yields with DeFi. You can also send and receive payments without a bank. In decentralized finance, stablecoins are the glue that hold the whole ecosystem together. They're the on-ramp, they're the off-ramps, they're the trading pairs, they're the lending collateral, and the settlement layer. Without stablecoins, crypto wouldn't function nearly as smoothly as it does today. With legislation like the Genesis Act, they're being brought into the official US financial system with rules, precautions, and support from big major banks. And why is this moment so historic? Well, we're watching the digital dollar being born right in front of our eyes, not from the Fed, but from the market itself. And on May 7th, 2025, the Office of the Comptroller Currency dropped an interpretive letter, 1184.
OCC-regulated banks may provide custody services, including the safekeeping and secure storage of cryptocurrencies and other digital assets, all on behalf of their customers.
That letter gave Fidelity-chartered banks like Chase, Bank of America, Wells Fargo, the official permission to hold crypto for their customers, to provide custody services, to facilitate crypto transactions, and even stake proof-of-stake tokens under proper compliance. This is a full regulatory green light. It was followed by the Federal Reserve rescinding their 2022 letter that forced banks to get pre-approval before engaging in crypto.
Banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, crypto companies. And banks are also free to conduct crypto activities as long as they do so in a way that is, protective of safety and soundness.
The brakes are now off and banks are moving fast, so you need to do the same. The Clarity Act. This is the end of regulatory chaos. Before the Clarity Act, crypto in the United States was the real Wild West. No one knew who oversaw what. The SEC sued everything that moved. The CFTC tried to define what assets really were. Companies didn't have clear rules to follow, and now they do. The Clarity Act fixes everything. And they do that by creating these three distinct categories. Securities. Investment tokens, think ICOs, are going to be now regulated by the SEC. There's digital commodities. These are native assets like Bitcoin and Ethereum. All are now regulated by the CFTC. And payment stablecoins. These have shared oversight between the SEC and the FCTC, all under the Genesis Act. This is how financial systems are built. There's clear rules, clear categories, and clear regulations. The Clarity Act also closes offshore loopholes. If your project touches US-based users, well, you're going to be forced to comply. Expect this bill to pass in July. And once it does, we might finally get the green light for safe, legal crypto exchanges, products, and launches all inside the United States. And last but not least, the Bitcoin Act, and it's bold. It allows the US Treasury and the Federal Reserve to buy and hold up to 1 billion Bitcoin as a strategic reserve. That's about 5% of Bitcoin's total supply. And best of all, they wouldn't need to raise taxes or debt. They'll just move existing funds like excess cash or treasuries all into Bitcoin. This act locks in America's right to self-custody Bitcoin forever. Even if the entire US government becomes a mega whale, well, you still keep your keys, you still keep your crypto. Will it pass? Maybe not the full version, but even if they just pass the self-custody provision, that's a massive win for freedom and decentralization. And why is this happening now? Well, Wall Street wants in, big banks want in, merchants want in. The government realized that they cannot ban crypto, and now they're finally trying to tame it. And in the process, they must legitimize it. All these changes are part of a coordinated play. The Genesis Act brings stablecoins into the banking system. The Clarity Act defines crypto assets, and the Bitcoin Act makes Bitcoin a part of the United States Reserve. And the OCC and the Fed give banks full freedom to participate. This is how the crypto rails will merge with the traditional finance system. So what should you be doing right now? Dollar cost average into Bitcoin. Don't time the market, stack it over time. Self-custody your crypto, get it off exchanges. Use a hardware wallet, learn stablecoin usage, try transacting with USDC, and learn the basics of decentralized finance. Watch the banks. When they launch crypto features, you need to pay big attention. Stay ahead of the curve. Read, watch, learn, and you'll be early to the game. Michael Saylor, as usual, said it best.
I'll leave it at this thought, which is when your bank tells you they'll buy Bitcoin for you and they'll make it really easy, and you can do it on the phone, it'll cost you $1 million Bitcoin.
That's right. By the time your bank offers to buy Bitcoin for you, it'll already cost you $1 million per coin. So don't wait. Let's learn and grow using crypto together. And remember, this isn't financial advice. I'm just some guy with a beard and a stubborn belief that money should work for the people, not against them. Smash that like button, subscribe for more, and I'll see you in the next one. Peace.